and there's a long period of time which compounded at 23%. You moved early. You had a portfolio of 225 odd stocks back in the day to a concentrated 15 stock portfolio, which kind of changed your investing life. So I wanted you, so you got onto this idea early. You're putting this in the wealth creation study now, but you got onto this idea, long back. So talk to us a little bit about that. What triggered that transition?
So, as I said, I was a very voracious stock buyer right from 85, 84, whenever I got little money. But till 94, because of these bad deliveries, one of the problems was, of course, we were buying 1,000 shares, 2,000 shares, but there were a lot of bad deliveries, and we were in broking business, institutional business. So a lot of these companies, my shares will be given to the institution, and bad delivery will come to me. Like that, we ended up making like 225 companies in our portfolio, finally. And then I read Buffett. That was the biggest impact. They talked about focused portfolios, because you should not have too many companies which you cannot understand, not take care of them. So they said 15 to 20 companies good. So I took help of my wife in 95, and I said, please help me bring it down to 15 or 20 companies. And she would methodically every day sell 10, 15 companies. And in a year's time, it took 1.5 years, 2 years to bring it down to 15, 20 companies. And that very year, the portfolio doubled. And then since then, the journey has been few companies and very chunky allocation, 4, 5, 10%. I typically don't want to buy less than 2.5% of my total portfolio. Like even now, if it is a 5,000 crore portfolio, I would like to buy minimum, 2%, 3% of the portfolio in every stock, because otherwise it will not make an impact. So, and then want to sit long, so that's a whole thought process. But it started in 95, 96.
It's almost impossible now, sitting here in 2025, that there was a period of time when Buffett was not as well known as he is now, right? But as you say, you learned about Buffett in 95, about his principles and concentration of portfolio, and that prompted you to whittle down the portfolio to this concentrated stock.
Yeah, so in 94, Sanjay, I keep troubling him always. So Sanjay told me, why don't you just read this guy's annual report? He sounds a little different. That's how he told. He gave me one copy of the report. There was no all the copies. He gave me one copy of the report. We read. We figured out it looks very different than what we know. I think by reading the one report, I realized that we don't know anything of investing. And then we found all the 20, 25 reports, got Xeroxed, and then we read the whole thing. And that changed the life. So now with the internet, blogs, all kinds of gurus are there all over the world. And you can get them on tap. So, and now books are available digitally free of cost. So it all depends on how much curiosity you have, how much you want to learn, and there is no dearth of Gyan. Gyan ki Ganga bahut zabardast bah rahi hai.
But it is important and it's interesting. So three names I want you to reflect on. Hero Honda, Hero MotoCorp now, of course, Infosys, Aisha. These are your three iconic multi-baggers. What common early signals did you see across them, if you can kind of piece a thread to it?
Yeah, so my style of investing was always buy high growth, high quality, high growth at a very low price. Very early in stage, but peg one or half peg. Half peg is my, if something is going at 25%, I want to buy it not more than 25p. Preferably 15, 17. Now these P multiples have gone 60, 70. These are new things. I wanted to buy Asian Paints. Always I liked the Asian Paint. But when I wanted to pay 15, it was 20. So I didn't buy. When I wanted to pay 20, it became 25. And then finally, once I agreed to buy at 23, and again, my dear friend, he said, let's wait for some more time, and it went to 90. So I never made a single penny out of that. So, once you identified a stock, you understand the company, that these companies are going to grow and they're going to create wealth, then you have to buy at reasonable price. I have never negotiated on buying at reasonable price. That is the first thing which I do, and the quality of business to be good. Because of Buffett, quality investing, I always looked at franchises, high ROE. First thing is look at high ROE. Does the company earn not even 15, 20, 25% return on equity? That's my first criteria. Second is, does it have good terms of trade? Like, say, can he connect his money in 30 days? The datas are not more than, if you have a 25% ROE, but 100, 120 days, God knows what you are writing. So these are the few things I see. And once that is there, then we try to go and figure out from the company what magic he is doing that he can keep earning 25% ROE in his business for not only now, but over the next 10, 15, 20 years. And then we go and buy the company if we like the company. Then I buy the company. The only thing was, once the company goes from, say, 100 to 300, 400, that time some other ideas come because money was limited. So, you know, you would sell that and buy something else. I remember one compounder I bought, that was BKT Tire, Balkrishna Tire. Today it is a very famous company, very large company. But when I bought it, it was a 100 crore company. And I bought it 1p with a 40%, 30% ROE. And there was no taker. I went to the company. Company refused, we don't want to meet you. And then next day, through somebody I went, I met them. They not only offered me, they offered me Rasgulla. And they told me the whole story. Then we bought. The stock went from 100 to 1200 in 2 years. We sold everything. Today it is 50,000 crores. It is one of the best compounders. But the issue is that, do you understand power of compounding? What can happen? So I think we were kid or whatever. I mean, we didn't. But there are a lot of stories and many more stories are going to happen. That is a beauty of this market.